Will rising interest rates stall the housing market? And what is the biggest opportunity in 2022? That's what we're going to cover in this monthly market report. This is for you if you are a real estate agent, a financial advisor, or an attorney interested in market data to help you advise a client, or perhaps you are that potential buyer or seller looking for some direction. I'm Paulo Rodriguez. I've been a mortgage professional since 2005, and here is the market data that you need to make an informed buying or selling decision or help your client do the same. There seems to be more questions than answers regarding the market right now. What's going to happen with mortgage rates? What's going to happen with the Fed? What's inflation doing? Add Omicron to that. So much noise out there, but be sure that inventory will be the market indicator this year. It is that every year in real estate. Here's a quote from Calculated Risk. It is possible that rising mortgage rates will slow the housing market, or the Fed might raise rates sooner than expected due to the recent pickup in inflation. But I believe one thing is certain. Inventory will tell the tale. The reality is that over the last couple of years, low rates, people's definition of home, people's desire to own a home, have depleted housing supply all across the country. And if we look at a graphic representation of this, here is a look at housing inventory year over year. What Realtor.com does here is look at where we were in December 2020 and where we were in December 2021. The national average, almost 27% down year over year. And you can look across the country, most of the country, somewhere between 15 and 50% lower in inventory. Clearly, still a significant lack of inventory across the country. If we look at this overview going back to 2019, this is a look at months of inventory in residential real estate. Where we stand today is that we're almost at the levels of the record lows of December 2020 and January 2021, when we had less than 2 months of housing supply. So that's the bottom line with inventory. We don't have what we need, we can't sell what we don't have, and we will not reach the market potential in real estate this year if we don't have the inventory, and we certainly won't see lower prices if the inventory situation does not change, regardless of what mortgage rates are doing. So where is the health of the real estate market? Is it slowing down? No, it is not slowing down. Showings still continue to crush pre-pandemic numbers. This is a look at showings over the last 5 Novembers coming from ShowingTime. So you can see 2017, 18, and 19 in the gray, and I guess you can call those the last 3 normal years. Then in 2020, we see the shoot up in activity, and certainly 2021, we saw even more of that. So the market is clearly not slowing down. ShowingTime said this: showings traditionally lag during the holiday season, but the data we're seeing tells us that buyer demand remains strong. The fact that every region showed a year-over-year increase indicates that buyers are undeterred, and it speaks to their desire to keep searching for their next home. And ultimately, showings are a leading indicator because, as you can see, there is a direct correlation to pending sales. Sales are higher than pre-pandemic numbers as well. If you go back to the normal years there in gray, this data from the National Association of Realtors clearly shows that recent sales are higher than pre-pandemic levels. So that's more evidence that we're not slowing down. There is strong demand out there, and that's translating into contracts. The market is moving, we just need more listings. So maybe you're thinking, I already knew that. I knew we don't have inventory. I know as a realtor, I've got plenty of buyers with nothing to sell them, and a bunch of sellers that would sell, but that don't sell because they don't know where they're gonna go. So what is the opportunity? If I were leading a team, or if I were coaching someone that's wondering where is the biggest opportunity, it's in getting a homeowner to understand what their equity truly is. Here is a quote from the Realtors Conference and Expo. The lack of insight around home equity presents an opportunity for real estate professionals who are always looking for touch points with past clients. Here in January, I would be talking with every past client, every active client, everyone that I'm doing business with, and asking them, do you know how much your home is worth? Do you know how much you owe on your home? That gives you your equity. Are there things that you need to do with that equity? Do you need to trade up? Do you need to downsize? CoreLogic's third quarter home equity report showed that the average homeowner with a mortgage had their equity grow 31.1% year over year. That number will shock a lot of homeowners, and those are people that need to know this information if they are thinking about doing something like a trade up or a downsize. And the other incredible number is that equity across the country for all homeowners that have a mortgage rose by $3.2 trillion. the deputy chief economist at First American said this: US households owned $36.8 trillion in owner-occupied real estate, $11.5 trillion in debt, and the remaining $25 trillion in equity. In inflation-adjusted terms, homeowners had an average of $294,000 in equity in Q3 of 2021, a historic high. Equity levels are simply unreal. No doubt, the biggest opportunity we have is to connect homeowners with the equity they have, define that for them, and be there for them to help them make informed decisions. So that's a wrap for the January monthly market report. I appreciate you listening in. Forward, subscribe, share. 2022 will be a fantastic year for real estate. I'll be back next month, but before you go, if you're looking to purchase or refinance, or know someone that is and would like a no-cost consultation with me, personally, feel free to reach out and I'll be happy to analyze if your debt is structured in the most optimal way or if there's room for improvement. Thanks for tuning in. Bye for now.